Joining us here at Post 9 and his CNBC exclusive is Global Payments CEO Cameron Brady, his first interview in the new role. It's great to have you. Thanks for coming in.
Thank you so much for having me today.
So we've been trying to get updates almost every day, it seems like, on the consumer and at what point there is a crack. And I mean, are we seeing the beginnings of one or not?
We're not seeing any of that in our data thus far. I would think the consumer, by and large, is hanging in probably better than I even would have anticipated as we started the year. Certainly, there could be a slowdown as we get a little further into the back half of 2023, but I would say our data right now is very strong around the consumer, and the trends remain pretty consistent. So my own view is, obviously, there's a lot of concern in the market around inflation and Fed action, and we'll hear more about that later this afternoon. But with the labor market where it is, the consumer's feeling pretty comfortable, and obviously that's good for our business, and it's good for the economy overall.
So it is that dynamic of knowing that your paycheck is durable means it's not about excess savings or what's getting drawn down or anything like that.
I think that's a big part of it, and I think that's why we've seen the consumer hang in probably better than I think many people would have anticipated.
Some analysts that we talked to before were wondering about the leadership transition, saying that Jeff Sloan, the prior CEO, left somewhat abruptly, sold his stock. Should they worry about that? Is that a concern? Can you just take us through why the board made this call now?
Sure. I think we've been talking about this internally for some time. So it may have been more of a surprise to the street, but it certainly wasn't a surprise internally, because this is something we've been planning for, frankly, for years. And Jeff and I have been working to transition me into this role over many months now. I think the reality is, running large public companies for a decade like Jeff did, it takes a large toll on you. And these are stressful, strenuous jobs, and they're exhausting. And I think we have recently completed a number of transactions in our business, really to simplify Global Payments as a go-forward matter. We also acquired another payments business that's very complementary to what we do. All those transactions closed in Q1. We're now in a more normal environment. So I think the board and Jeff felt like this was a good time to make that transition.
Well, one of those acquisitions related to the B2B business, and there are a lot of questions about what that is looking like from here.
Yeah, I think B2B is really the next frontier for payments. And of course, many people would say it has been for some time, but I really do think we are on the precipice of seeing significant growth in B2B, particularly the digitization of B2B payments. Obviously, as we move forward post-pandemic, businesses are looking for ways to drive more efficiency in their businesses. And AP automation, AR automation, digitizing payments across businesses for wholesale goods and services, I think is one of those areas that they're really focused on. So B2B is a huge addressable market. It's probably 3 to 4 times the size of the consumer market. It's highly fragmented and underpenetrated. So from our perspective, it's a fantastic growth opportunity for Global Payments.
Where does the U.S. stand in terms of the ladder of innovating the fastest on that front?
I think the U.S. really is taking a leading role in innovating around digitization of payments more broadly. So I think we're seeing trends across both consumer payments and business payments, particularly post-pandemic, we're seeing accelerated trends around the digitization of payments. And clearly, a lot of what we're doing in the U.S. is designed to make it easier, less costly to move money across businesses and from businesses to consumers.
Talk about the competition and what's happening with your market share, because I do feel like there's been a knock against you for losing share, and that's why the valuation has come under pressure.
Yeah, look, this is a competitive business, and it always has been, and it always will be. I would say I'm actually more bullish the competitive environment now than I have been in some time. We're coming off of a period of, basically no cost of capital, and when capital is free, everything's a good idea. And when capital's free, companies tend to focus more on growth at any cost versus having to balance growth and profitability and running businesses for long-term value creation. So as I look at the competitive landscape today, I'm actually more confident with where we stand. In a more rational capital environment, I think we're poised to continue to grow and gain share as we have been over a long period of time. This whole idea that we're losing share in the market, I think, is completely wrong. And we've been gaining share in the areas of the market where we choose to compete. And I think we've done a terrific job of that as a company for many, many years.